I think there are two main facts here. The first is that the economic backdrop has been improving. So the risks to the downside have been lowered as the likelihood of a global recession has receded. So that has fueled optimism in financial markets. Earnings have surprised to the upside, and so we have seen the continued easing of financial conditions. Equity markets are up, credit spreads are lower, and the path of interest rates is generally down compared to 6 months ago.
I was struck by a comment in your report. Volatility in financial markets has remained low on net. I've got to say, it didn't feel like that when I was live on air in August and then again in September as we had market events. But now we're on the cusp of an election. It feels as though there's more FOMO, fear of missing out on markets, and more confidence even with what could be a big event. How do you read in on the sentiment? What sort of volatility could lie ahead?
Right. So when we're looking at equity market volatility, that is at fairly low levels. But you're absolutely right to point to August as an episode where there was a sudden spike in volatility, a sharp sell-off in risk assets, including in equity markets and in protection against downside risk, so in option markets for equities as well. But that was very short-lived. So it was really like a sudden bout of risk aversion, but it receded very quickly. Now it does point to a potential conflict between the low volatility in financial markets and the relatively high policy uncertainty. And, of course, we've seen elections in many countries this year, and there continues to be a backdrop of uncertainty as to how economic policies are going to evolve globally.
There are still risks everywhere, and in the report you highlight sovereign debt, non-bank leverage, preparing banks for future market shocks. What's the most pressing issue?
So we do think that on the financial regulation side, we have made great advances in the past decade, but more needs to be done to really finalize the full implementation of these Basel III standards in the banking system around the world. In the non-bank financial sector, there are also emerging changes as to how the financial sector works, and so adapting the surveillance and the data in those sectors is very first order, and there are some regulatory steps that are also discussed at the international level. So I think that is really the baseline for financial stability.
European banks are debating whether bigger is better, and of course the consolidation we've seen in Switzerland to whether there should be cross-border consolidation in Europe between Commerzbank and UniCredit. How does this pose a systemic risk if we're talking about more cross-border mergers here?
So we feel very confident about the regulatory approaches to these major banks. These are the globally systemic banks, and we are supporting a common market in banks and in capital in Europe. So, to the extent that mergers can increase efficiency, in general, we're supportive, though we're not commenting on any specific deals, of course.
Let's talk about other dynamics out there. China, in recent weeks, it's announced a raft of different measures trying to tackle some of the issues in the property market. Does that ward off some potential concerns as far as you're concerned on financial stability? Yeah,
so the People's Bank of China has supported financial markets via asset purchases, via easing monetary policy, and that has lifted sentiment in markets, has eased financial conditions. So generally, financing for the corporate sector and the household sector is more ample now than it was, say, a month or two ago. So those are steps in the right direction. There have also been some policy announcements on the fiscal side that we welcome. And of course, the authorities have already done quite a bit of work on financial stability, particularly with respect to the residential housing market.